tying it all together. So moving forward, so it is clear that we should not be taking trades in isolation of information that can help us make better decisions, right? We've gone over that quite a bit. There's a reason markets move the way they do, and we can systematically anticipate what a stock will do next and capture some of the next move that it makes. A stock will reject its old value and then seek new value. Whether that is higher or lower is the question. We will be patient and let it show us where it wants us to go, not force our opinions on the market. We will use cycles and oscillations in price to help get the best entry possible to stack odds of success in our favor. Directional bias. So I like to use some of the high-level information to help establish what I call an initial directional bias. This is the direction that we will focus on based on our initial analysis. Right? If we do not do this, it can be easy to come up with multiple future scenarios if the market direction is not super clear, and the result is second-guessing your decisions. The point of all this is so that we can have conviction in our trade ideas and then let the price action prove us wrong or right. But this allows us to immediately make a plan and then take action. The goal is to remain flexible, step on the gas when it looks like we are right, and hit the brakes and potentially reverse when it appears that we are wrong. Alright, creating a game plan. If you do not keep an open mind and allow price to lead, then losses are sure to follow as soon as you start forcing your will on the market, your expectations. At this point, we need a game plan. And if you want the good answers, then you need to ask good questions. On the next page, we will go over a sample trading plan that will allow us to focus on specific things that will bring us in sync with the market. Once we've done that, we can lay out a few scenarios we think might happen, and then start looking for our next trade. I cannot overemphasize the importance of this step. Almost every single time I have a bad day or couldn't see things clearly, it is because I rushed through the prep work. We will go over this in much more detail in the final course where we will build out our strategy. Alright, the trading game plan sample. What direction is the trend of our longest time? So that I usually start with that would be starting with the first one and we're working our way down. So these are intentionally in order. So what direction is the trend of our longest time frame chart, or is it consolidating? Even if it's consolidating, what was the previous trend, right? Where are we at in the cycle? Are we in the beginning or the middle or the end if we had to guess? What direction is the trend of our immediate/trading time frame, or is it consolidating? Are there any patterns on the higher time frame that we should be aware of? What about our trading time frame? Where are the most obvious support and resistance levels? What is our ADR? And based on that, could some of those more distant support and resistance levels make sense as a profit target for the day, the week, or the month? Where was yesterday's value and value areas? Does it look like price is moving back towards or away from these areas? Does it look like a trade that fits our strategy is lining up, already fired off, or do we need to sit on our hands and wait for opportunity? So what should happen now is, now that we've gone through the entire course and we start to wrap things up, you should start to get an idea of what it's going to look like as we put things together, right? And so that's kind of the idea behind this. And this isn't the full story. This just gets us in sync with the market that we're looking at, and allows us to set that initial directional bias to go, okay, long-term trend is up. Seems like we're at a good place in the cycle. It looks like our trading time frame looks like it's getting ready to it's getting ready to fire off a trade in the direction of the long-term trend, so that's great. Yeah, maybe it's a triangle pattern, right? That looks like it's just starting to break out to the upside. And then it looks like we can always find previous support and resistance levels, unless the market is making brand new highs, then there's some sort of resistance level that it's going to bump up against. So we want to be aware of that. You want to know that if the trade's going to fire off, if it's going to immediately run into a resistance level that happened on the weekly chart 2 years ago that was the last high, that's going to make a big difference as to how well it trades around that level as compared to if there was nothing, right? What is our ADR? So how is our volatility lately? And what can we kind of expect as a range for the day? Is it shrinking or is it growing? Should we be conservative or should we be aggressive? Where was the value area? Are we breaking out of yesterday's value, or are we moving back towards it? What about last week or last month? Right? We want to know if it's going to be, if we're looking for it to trend and it's breaking out, or if it's heading into consolidation. And then kind of most importantly, do we have a trade, right? All this information doesn't mean much if we can't use it. So once we have a trade strategy that we build, we're just essentially looking for either something where we can get in the market completely full size and represents a full opportunity, or maybe we get in with just a little bit and we try to pull some of the money out of the market based on what we expect to happen, you know, through maybe just like momentum, right? Maybe we just put on a third of our position because the market has was going up a lot and it reversed, and even though the trend's still up, the market's just falling, right? So maybe we decide that we want to put on a little bit of risk and just go ahead and put on a short profit target, maybe a previous support level with a smallish stop, and just see if we want to pull a little bit of money out. All those things still play into the overall grand scheme of what we're working on, right? The trading game plan of exactly how we look at the markets, how we get in sync with it, and then how our strategy fits into that, and then it's being consistent with taking those trades. And maybe you decide to try to take those momentum trades every once in a while, because I mean, you know, we want to trade our plan, but we also want to have fun. We want to test new ideas. We want to do, as long as it's not hurting, or we're trading smaller, as long as we're not hurting our overall profitability, then those things are okay, right? That's how we learn, and that's how we grow. But you have to document and you have to track those things. When you decide to do a momentum strategy, you find that, man, every time that you decide to get in, that sucker reverses on you and you lose that little bit of money that you risked every single time. Or maybe you do it 20 times and it's 50-50, but you won't know that. You're only going to remember kind of what your mind wants you to remember. Your subconscious takes over at that point, right? So we need to document those things and decide, be like, you know, I'm really, really driven towards taking that momentum trade, but every time I do, or over the course of time, it costs me money, it costs me resources, it costs you mental capital. It's just not worth it until you decide that you're not going to do it anymore, right? Again, you're not going to know that unless you document it, unless you're using your trade journal and all that. So anyways, it's a long way of saying this is the trading game plan. This is kind of the foundation of what we're going to use in after we're putting together a strategy and when we're stalking our trades and trying to get involved in the market every day. If you're a day trader, we're going to be looking at this every morning. Or if you're a swing trader, you're going to be paying attention to this throughout the week.